Good morning, everyone. Good morning, everyone. Okay, volume is good to go. I see we got a couple people waiting here. Thank you, and good morning to you, whoever you are. All right, let's get it started. So, to keep in line with today's topic, Friday morning lottos. Been a long time, been a while since we did one, eh? I got a couple ideas. I got a few ideas of today's lotto, but it won't be specific to today. I'm thinking for today's lotto, most of them are looking like, due to a few reasons, we're looking at next week. But let's discuss why. Let's discuss what I'm looking at here. First one, SPX. I'm going to discuss the market, same as usual. Now, very interesting market. Now, what we're looking at before, last time that we did a quick forecast was based on the price action over here, and us saying that we could probably be looking at a bounce to that 0.382 before coming back down. Now the interesting thing is we got the bounce and coming back down on that same day, yesterday. Yesterday was huge bears. Now where are we going from here? Remember those trend lines that we drew? There's a warning line, a must-hold trend line that we lost on Tuesday, and then a GG warning line, and then a GG line. So we lost that must-hold trend line on Tuesday, and then we saw a very nice follow-through with that head and shoulders pattern following through as well. Now the GG trend line was lost on Wednesday. So we saw a bounce on Thursday going into that daily 8 as we talked about. Depending on where the chart was at, the daily 8 would have lined up with the 0.382 as well as that must hold trend line for a back test. But because we did not get the back test of that must hold trend line, yesterday's loss was very significant. So what we're looking at is essentially a back test of that trend line now. So but then again, hey, what do I know? I've been calling a bounce. I've been calling a bounce since what? We got the Tuesday one, so we got the immediate back test over here. Since yesterday, I guess. Yeah, I've been saying potentially since yesterday. We did get that bounce yesterday, but it's not the one I was looking for. So let's see if we get that bounce today. I'm thinking now with OPEX today is going to be a little bit more next week instead. So today is a potential spinning bottom candlestick. We are a little bit, very slightly extended. Yeah, we are slightly extended on that daily. The main thing I'm looking at now, actually. Yeah, there we go. First, so it is lined up. It's funny how this works out sometimes, eh? If you look at remember that 200 MA, simple MA that we're looking at, 200 SMA that we're looking at. Yeah, that just so happens to line up with that GG trend line. That's so interesting. And to note, this is that first touch ever since. The last touch we got was June of 2020. So a year and a half later, we finally coming back down to touch that 200 SMA. Let's take a look at what generally happens. What was last time? Last time was over here. Woo, there can be a good bounce. Last time we ran with over a year without touching it was over here. So this was November 2016. All the way to the next touch was February 2018. November, okay, so a year and 3 months. Very, very similar. So this is what happened the last time we touched it. Of course, this is on the daily chart, and the drop was a lot more significant as well on this 2018 drop. A lot of people are comparing this environment, this pullback, this consolidation whatever you want to call it. A lot of people are comparing this to the last rate hike, which was 2017, 2018. And I guess in the sense of the chart now, it does look very, very similar. A year plus of not touching the 200 SMA. Good morning, Darren. I'm doing okay. Can't say I'm doing good. I'm doing okay. How are you doing there? So from here, what we're looking at is a potential repeat with that. Over a year of not touching 200 SMA. Now we're pulling back. The last time this happened was 2018. Was comparable. It is the same situation. Rate hike. At least one of the situations. One of the reasons. One of the causes for this pullback. So we are looking at a potential bounce. Now I'm not saying it's going to be today. I am saying it will be before end of next week. Yeah, that makes sense. So today, even if we were to go sideways, we will be seeing a reversal candle on... Wait, no, that's not true. So if you were to go sideways today from here, this will be a reversal candle of spinning bottom, touch of 200 SMA. Ideally, of course, we want to see that bounce. What was the last one like? What's the candlestick look like? Yeah, that's a strong bounce. So ideally, that's the kind of candle that we want to see today. But of course, it's gonna be a lot of work for the bulls. So essentially, with the bearish action that we have seen over the last, how long now? 5 trading days. So a whole week of consolidation. And overall has been 2.5 weeks of consolidation already. What I'm thinking is, even if it's just a temporary bounce. So again, essentially we got the bounce of this forecast yesterday. Everything just happened on one single candlestick, a bounce and a drop. So from here then, let's do a new forecast. Oh, this may not be as nice. We're not too far extended on the daily, whereas the 2018 one, and do a lot of comparison. Maybe I should just do a double chart side by side kind of a thing, eh? This looks a lot more extended from back here. 8% to the downside extension. Whew, yeah, we might not see that kind of bounce. So this is only some look like 2%. Yeah, almost 3%. We will have a bounce. Problem is, we can be seeing something like that before an actual bounce to back test. So SPX, let me get into why I think I'm pretty certain, aside from the fact that we're at 200 SMA, we're at the GG trend line. Everything else does line up with a bounce. There's quite a few things that I wanted to talk about that leads me to believe there's going to be a bounce. And the pre-market action here looks like bulls are trying to step it up. Trying to. A lot of tickers are also gapping down. So I will be, also for those of you that are in Ford short, I will be looking at taking half profit today. Whew! Another gap down. Congrats, Ford shorts. From here, so again, 2 reasons on SPX. GG trend line, 200 SMA. That's 2 reasons so far why we'll be seeing the bounce. Let's take a look at NAS. So NAS did lose that 200 SMA. We are at the 0.786. Now, this is not a strong enough reason for me to believe that there's going to be a bounce. And there's not too many supports here. Essentially, I guess, depending on how you draw it, you could call this a decent zone itself. You see a rejection here. 1, 2, 3, 4 back tests. This one lost it slightly, but this is, now that I'm looking at it, this one is a lot stronger than the one below at least. Multiple back tests. Yeah, that 14614. So this does have another reason over here, 0.786, as well as this support resistance. That's a third one. Fourth is looking at RUS. It's not perfectly lined up. We are in that zone next down. This is not a head and shoulders pattern. Yeah, this is not a head and shoulders pattern. And this has been, without a daily low or high, 12% drop on RUS. And the loss of this key support that we have seen 7 bounces from before, that was key to short. And from here, even from there, it's been a 5% drop already. And we are 4% extended to the downside. We are in that key zone the next key zone down. Yeah, that gives another reason. What is that, 4th reason now? Dow, not as strong of a reason either. Not as strong. I would have ideally liked to see a touch of this area, but we are trying to hold the 0.786 on Dow. So that's 4 reasons. Over 5 reasons actually. Everything, all the indexes are lining up for a bounce today, but knowing it's OPEX, it may not happen today. So keep that in mind. Don't go oversized. Don't go early. Look for signs of algo. Look for signs of unison move. That will be the entry for bull play, bounce play, or whatever you want to do, or even exit out of your bear plays. Partial exits, not all of it. Ultimately, the bears are still in control. So remember, depending on what your time frame looks like, remember this one is still just looking for a bounce before another coming back down for another consolidation before bouncing up. So if you also, the other thing is, if you look at this chart, this is a very clear ABC correction now. So if we were to do a extension, interestingly enough, we do not have an extension drawn on SPX. So always make sure that would you look at where that is? We'll always make sure that you draw an extension out, ideally ahead of time. Not too sure why we didn't this time, but regardless, this is a extension target that we are stalling at. 1.272 it looks like. Yeah, 1.272. So again, you draw from the high to the higher low, ideally, or wherever that next low is, and then the lower high. And that should show you the extension to the downside. Now the opposite, if you were looking for extension to the upside, then you would draw from the low to the higher low to the higher high to the higher low. That will show you extension to the upside. I'm going to change this to the 1-to-1 extension target. Okay, so we are extended right at that 1.272 as well. Hey, that's another reason, right? Yeah. All right, so everything's calling for a bounce. I'll bet 100%. I'll bet $100 that we will see a bounce by the end of next week. So don't try to time where the bottom is going to be. What's the other thing? Oh yeah. So the other reason that's leading me to believe that there's going to be a bounce, when we look at VIX, this is one of the top things that we look at. Okay, now looking at this chart. Look at the weekly. So these are the 2 patterns that we were tracking before, right? Now, VIX didn't... You can't really say that VIX has really popped. If we don't bounce today on the indexes, there is a good chance of a huge gap up next week. That will be the scary part for the market. And if that's the case, I will be likely exiting all bull positions and going into VIX. Pattern is still intact. It's looking very much like it now, actually. This is, so of course, the circle is going to have to be drawn a little bit bigger. Something like that instead now. So glide along that upper trend line before a pop, and then there's a huge gap up continuation. This is, of course, pandemic, so the reason is a little bit different. But looking at this, glide along that upper trend line. It's coming. It's coming. There is a potential that it's coming. This is a GP. Coming up to the GP already. Excuse me. Let's do the, that chart's a bit harder to look at. Maybe this is a little bit better. GP. So we have one more move, one more day. I guess Monday should show. Monday, if we were to, the candlestick is very, very similar, just under that GP. Monday, let's see if we touch that GP on Monday. So we are just under that GP right now. If we're to touch that GP on Monday, or is it today? Yeah, if we're to touch that GP today, that could be a very huge concern on VIX. But yeah, so this is why I'm thinking that, you know, VIX hasn't really popped anything crazy based on market pullback. You know, you would have wanted to see, because this was November 29th, and November 29th pullback, where was it? Over here. You look at this pullback, is nothing comparing to current pullback yet, right? So it's minus 5%. This current pullback has already been minus 8% from the high, higher than the last time, to the low, lower than the last time. However, the VIX is not popping nearly as much. Yeah, last time we popped was much, much bigger. Versus this time, the VIX is not popping as much. All right, and then the other reason, US dollars still rejecting from that weekly 8. Sideways action. Not showing too much of a concern. US 10 years is pulling back. So I am now changing my view of US 10-year yield a little bit. There is... People do use it, I still do strongly believe it as a leading indicator for the market, that in the case it does. Well, now that I'm thinking about it, 10-year, it is a positive correlation, because I've always used it as 10-year as a leading indicator, at least a 10-year over 2-year leading indicator of whether the market is crashing. And then if you look at that chart, every time, let's just pull it up. Every time it goes sub 1, the last time was of course before pandemic, and then the time before that is before 2007, and then a year within 18 months of that, you'll see a market correction. So same as this one back here, sub 1, based on the chart, it was like August 2019. And then within 18 months is a market correction. So in that sense, US 10 years should be positive correlated. 2 years might be inverse correlated. But that's the other thing to look at actually. We're at 1.754, getting close to that sub 1 ever since the high of 13. That is a huge difference, okay? This is, what is this, daily chart? And March to, within a year, we have pulled back almost 12%. Very big thing to note. Within a year, we pulled back almost 12%. And we noted that this is potential double top back here. And also we noted that on the last run was 917 trading days versus this time was 284 trading days to run as much. So we will see a huge pullback. Once this goes sub 1, that is something to note. That's something that you want to make sure that you starting to go a little bit more conservative, maybe playing a little bit more bearish side. But regardless, back to the topic, we're looking for a bounce. So if I were to enter a bull play, option play today, I would be a couple of things I'll be watching. I'll be watching for that first morning I'll be watching for that first morning dip. If there's a dip, it presents a much better entry on Lotto bull plays. Holy sh! I just saw FNGU. Is that a huge gap down? Apple's not gapping down. Must be China. This is a huge gap down on FNGU. Holy. Lost that money line. Oh, ho, ho. Jesus. $129. Where's 129? Right here. That was not gapping down that much. That's weird. What's gapping down that much, dragging FNGU down? Is Twitter? 0.75. Tesla didn't gap down that much. Nope, wrong one. Facebook, Google, Netflix. Must be Netflix. Oh, there we go. Netflix, minus 20%. Yo, is this real? What's going on with Netflix? If this is real, we're gapping straight down to... Yes, depending on where you draw it, this could be a key zone support. Hey Darren, can you confirm if Netflix gap down is real? 20% gap down on Netflix? Trying to scour through. I don't see any reason why this is not real. What's the news on it? Oh, yo, that would be the play if that's the case today. Just noticing this huge gap down on FNGU, so diving into why and finding Netflix. US futures lower, Netflix weak subscriber growth guidance, dense sentiment. Weak subscriber growth guidance. Okay. And it's on the top pre-market decliners. So there is... How come it's only Netflix on here? BitF, GVP, just to see if it's right. What's BitF gapping down? Oh, it's Canadian. What? Why is it not showing pre-market? Is this Canadian as well? Why is it telling me? Oh my god. Okay. Whatever. Netflix. Tumble 19%. Yeah, that's right. Woo! Yo, Netflix. Can be a play there. Let's take a look at the chart. Oh, this might be sexy. That's 0.786. No, so is it platinum zone? Yeah, it's right there on the platinum zone. And right about there, but I don't like it. So let's draw it from here. And we'll go to the high of... it's going to be a relatively big key zone, which makes sense. You know, you want to... It should get thicker and thicker as you go down a chart. So that is in the key zone. It looks a little bit too high. Even if we were to draw it. So bounce. Bought up. I like this area. Yo! Now how would you play it? Amazon is definitely over, so but look at Netflix. Morning, John. Look at Netflix, man. Yo, this is such a good opportunity. This is good thing we didn't play Netflix. We haven't played Netflix, and everyone's saying Netflix gonna bounce. And look at this, 20%. Yo, how are we gonna play this? All right, couple ways you can do it. 3 ways maybe. Commons, for sure. That's the other interesting thing is with Netflix gapping down this much, NAS is not gapping down all that much. Eh? So yeah, commons for sure, and then it's just a matter of how would you pick the options on Netflix. I hate, and it's just personally based on experience. I really hate playing long dated calls or long dated options, as a matter of fact, unless I am sure that the long term is gonna be running that way. So if we look at, look how extended this weekly is gonna be. Now, boom, 30% extended on the weekly. There will be a oh fuck yeah, I'm serious, man. That was fuck yeah. Oh my god, look at this. So back test of this previous high, very key resistance, you know, rejection. So there could be a little bit more downside to coming down to obviously 305, but now your risk reward wise, you know, you're looking at what, 4% down to even say a bounce to 0.382. Always, you know, balance, always look for that 0.382. So let's say that we bounce from where we are. So worst case scenario, no, always worst case. Worst case would be, you know, coming back down here from a bull perspective. And worst case from a bounce perspective is we bounce from right here where we are, and it means, you know, 517. So the risk to reward, oh come on, yeah, I'm just gonna do this. Risk reward 9 to 1, 9 to 1. I like that ratio. So comments, and then weekly is extended. Monthly is going to be extended. Yeah, monthly is going to be extended. Problem with this is we're still within that month. So the actual bounce could happen next month, because we're not extended on this month yet. On that next month, we could be, that'll be extension. So with that being in mind, at the very minimum, I'll be probably looking down March out. But personally, I think my game plan on this one is probably gonna be commons first, options based on the opening price. Wait, I wanted to take a quick look at something before I replace my charts. Okay, so it's inside bar. Right. No interest in that one. BBIG short. By the way, also, for those of you that are following, BBIG for the free play, BBIG and as well as F. I took profit on BBIG. So what's the other one? NFLX. Okay. Netflix. Yeah, even the chart looks like it's real gap down. No reason not to believe it now. So it'll be on, what I did was just, it's pulled up on my short-term chart. Yeah, that's, I just pulled it up on my short-term charts. Is likely gonna, I'm likely gonna replace one of the semis, like the AMD, with Netflix on the daily charts as well. But on Netflix, probably gonna do commons, small, half or maybe even the third sizing of commons first. This pandemic low? No, this is pandemic low. Okay, so we're actually coming back to that pandemic low area. Back test. $393. That is a key area to note. So we can see, yeah, I can see this dropping a little bit more, but that's why you do half sizing, especially based on how pre-market is not bouncing yet. This is new news. New news it might take a little bit more time for this to play out. One thing we don't want to see, I mean, it's Netflix though. One thing we don't want to see. Oh, this is earnings. Oh, did someone play earnings lotto on this? My god. One thing we don't want to see is like Peloton, you know, gap down, slow sell-off. But in comparison, it's Peloton versus Netflix. Regardless, We'll start with commons, and then from here, you could do lottos. I just don't like how this not bouncing the pre-market. So if I were to do lottos, it wouldn't even be lotto anymore. I would probably be looking at minimal 2 weeks out. And to maximize on the play of this one for bounce potential, I'd be looking at March options. Yeah, let's take a look at Amazon. We are dwindling on this Netflix for too long. But that, regardless, it is going to be on top watch today. My God, that just really killed FNGU, hey? Amazon. We're close to that bottom key zone now. And it's not a breakout fake out. It is a double top. And it's pulling back a lot more than I would have expected, of course. The support was all the way back here. But looking at this we are getting extended on the daily for sure. In comparison, it's nothing comparing to Netflix. But the Netflix is news-based. So this is... And one thing is very interesting to note is ever since this huge gap, okay, this is Bezos announcing that Bezos announcing that he's resigning, and since then there has been noticeable bearish action, even on this attempt to break. Bulls failed, so that is something very key to note on Netflix. More than 1 year of sideways action. This had to break, in my opinion. It did not break, and there's now significant bears coming in again. So we'll be watching for this area. Low risk entry. Excuse me. Depending on what's going on, of course, it's if we're to lose this zone, we could be looking at something like Netflix, huge gap down. Never know nowadays. Maybe the big techs are the ones that are getting targeted for the hit. But on the daily chart, we're not too far extended. We are extended on the daily. We're not oversold on the daily either. 8 hours not oversold. Oh, weekly is getting extended. Yeah, weekly is getting extended. There's no key support over here though. So we can watch for another bleed down to the key zone before it bounce. As mentioned, this looking at the market, this is likely potentially dragging out to next week before an actual bounce. We are losing that monthly 8, so that is key to note. We are looking at, regardless when the bounce comes, well, there's going to be a lot of things that we're going to be watching for backtest. Bearish market year. I don't know about year. It will be it is bearish market. Without a doubt, it is bearish market. GG trend line. So remember the trend lines that we talked about. This is on the SPX. This is the GG trend line that must hold by the bulls, at least on the shorter term, before we actually lose it. So 200 SMA GG trend line, potential reversal candle. We don't know yet. It's a little bit. Today's action is a little bit different than the previous 2 days. To note, if you look at on the hourly, previous 2 days the bounces have both started overnight or in the after hours when the market is not open, and then towards the end of the day, then there's a huge sell-off. Where am I looking at? So this is 12. Yeah, so this is yesterday. The sell-off started at 9 o'clock. Day before, sell-off started at 8 o'clock. So the bounces were overnight. And today's a little bit different because we did see a bounce overnight, but then it got sold off into already. So this could be a higher low. Not gonna be calling the bottom though. So from here, it just makes sense to bounce from here. But then again, it's OPEX. So it might drag out to next week. Any other tickers you guys are watching? Oh, crap. Sorry, I just realized something. Yeah, exactly. High volatility over the next few days, and there's earnings coming up as well. Apple's, was it Google? Google, Microsoft. I want to see all the big techs. All the earnings coming up as well. So the only lotto, actually the top lotto, the top lotto would probably be Netflix. If you were to bet on something today, and I say bet because these are lottos, there's a lot of charts outside on the downside of linear regressions, lower trend line. Amazon, let me just show you guys what I mean. This is, nope. This is the linear regression. I'm gonna delete my. This is the linear regression. So it basically draws a channel for you. And this is outside. There's a lot of charts that are outside. Even all the ETFs as well. Ying's actually the only one that's upwards. Wow, MRK is still holding up. MRK is still daily bull flagging. Slightly lost at 88 yesterday. This is a strong chart. Just unaffected by the market whatsoever. Keep your eyes on the MRK. Lucid is bearish engulfing candlestick yesterday, so that's something to potentially be concerned about. We are not gapping down today, however, so that's kind of interesting. So on this kind of candlestick, bearish engulfing, I would have expected a gap down today. The bulls are really trying to hold that GP. So on the loss of, I want to say yesterday's low, but it's not that far away. There is a cause for concern for this. Ultimately, this green trend line, this money line is what must hold. So a little bit of a chop around it. Rejection, and then a bounce over here. It can probably be redrawn a little bit better. Maybe draw a little bit lower. Let's see, does that work better? Still a bit chop. This might work a little bit better. But yeah, this is the must hold on Lucid. It's looking a little bit more bearish because of that bearish engulfing yesterday. Holy, Micron got slaughtered yesterday, hey? Look at that daily bull flag in new all-time high zone. Oh man, there's gonna be some very nice short opportunities in here. Might have missed it yesterday. Wednesday would have been the opportunity on the loss of this low, because ultimately now this is a breakout fake out, and we're seeing huge follow through to the downside already. So this, where'd it go? This was the opportunity. That 91.14 must hold, previous resistance and support. Wow. QCOM, huge bear showing up in the pre-market now. So that would provide us with the opportunity of a gap down. Lotto wise, again, guys, I would be looking at a week out. Wouldn't be looking at this week's Lotto. Just because, there's OPEX, FOMC, as Darren mentioned. So from here, QCOM, previous all-time high back test, bear break of the short-term trend line, lower trend line, and now we're looking at previous all-time high back test, 165. Is this a gap down? No, slight gap down. Decent opportunity for a bottom fish. 0.382, still a really, really strong chart. We're not even touching the 0.382 yet. Ford, Netflix. Hey, if you guys don't have any tickers, I think that's about it for today's video. Sorry, I forgot to send a message to our group this morning for the live video. Just gonna do a quick scroll through on the watch list here. Disney 4% gap down. Oh, is that straight into lower low? That is straight into lower low. Let's clean this chart up a bit here. Straight into lower low on Disney. Big gap down. 4% on no earnings. Is there news? Oh, doesn't look like there's news. Interesting. Piton gap up? Piton negative 24% yesterday based on that stopping production news. And we're seeing a gap up today. I don't like it because we already lost the key zone. Would not be a stock that I touch. You know, you're looking at this. If you're trying to play a bounce, even if based on the big bears and then a gap up, we could be looking at this. So even if we're looking at playing a bounce with this kind of scenario, the opportunity is going to be very, very small. You're going to need to be so precise on this, but there's a chance that today can be this kind of day. Strong, weak close into gap up. Gap up is not nearly as strong though. Fubo, gap down, nothing interesting there. Oh, there we go. Bit F is gapping down 9%. Nope, still not interested. Hut is down 7%. Coin down 5%. New. Oh, almost. Coin almost new all-time low. All-time low at 208. We are at 209.35. Did we get a new all-time low in the pre-market? Nope, right there. Extended hours showing 30-minute bear flag on coin. Low risk, easy bottom fish over here. You know, commons kind of a thing, or even calls just stop below 208 on coin. That could be a very nice lotto. All right, so that's it for today's video. I think that's it. Yeah, we'll call it today the end of today's video. Thank you guys for joining us. Bulls are now showing up again in the pre-market here. So choppy action. It is OPEX. Don't overtrade, guys. Thank you for tuning in. If you know anyone that may benefit from the videos we share, please consider sharing our channel with them. I will see you guys in the next video.